You're buying more of the Qs today. Steve Weiss bought more of the Qs. Why'd you do that?
I'm trying to guess what the lemmings are doing and be a lemming myself.
You're just jealous that, you weren't in on that action, my man.
I was in part of the action, but I did get in late to it. No, I'm not a hater. I'm a realist. And I'm an analyst.
Market's going up? Is that what's real?
I think the market is still going to go up. Look, I mean, I didn't count in this, even though I'm short bonds, I didn't count in this big move today, but I get it. Look, what I saw in the jobs report, which is when I added to the
monster,
Qs, was that I saw a monster, but what I also saw was that the labor participation rate increased, and that was critical to me. And I think that's occasioned by a couple of things. It's occasioned by people running out of the money that the government so graciously gave them that helped fuel inflation. So it said, hey, my savings are being depleted because I've spent too much. I got to get back to work. That's one thing. We know there are more than 11 million job openings there, number one. Number two, our borders have opened up as well over the last year. So you saw a massive increase in hiring in the leisure industry, and that generally has been fueled by immigration. So as they come in, it's adding to that increase. And then when you take a look, while inflation is still obviously very apparent in wage growth, it hadn't moderated somewhat. But when you take the combination of the number of jobs that were created and the wage growth that we saw, which I would term as muted and perhaps below consensus, that's very positive for the bullish scenario. What I see in terms of my outlook, and now it's more of a second half outlook, I guess, and which is that's when, as I said yesterday, you'll really see the Fed action, the Fed tightening cycle hit earnings. So look, do I think the market's overvalued? Without a doubt. Do I think that stocks like Amazon, Facebook, and maybe Amazon not so much, but Facebook and NVIDIA are in lunacy territory? Without a question. I mean, you take NVIDIA a multiple of 92 times, and you can say it's trough earnings, but think of what the earnings have to do to grow into that. And it's nearly...
Well, the earnings have always had to grow into that multiple, whether it was in the sky or coming back down to earth a bit.
Well, except for the fact you're trading near an all-time high multiple on a stock where you still have down earnings. So it's not what it was earlier. As we heard from Amazon Web Services, and we've heard continually, that data center growth has slowed, cloud growth has slowed, which goes into data centers, that it's just not there. So I think you need more for that. Look, I just think that people want to buy the market, and that's going to work until we see the next reason not to, which will be earnings.
Did you sell Apple too early?
I sold it on Tuesday. Did you know that? I sold Apple personally, and it came out of Joe T, in case anyone forgot. So it looked bad. It looked bad yesterday. It looked bad today. And guess what? I think it's probably going to look bad for the foreseeable future. Because what's happening right now in the market, and today's a classic day of bad news, good price action. Right. Amazon, Alphabet, Apple. Right. Buy the dip is back. When was the last time we saw buy the dip?
Yep.
Buy the dip hasn't been present in the market for the better course of 15 months. So at the beginning of the year, let's think about it. Who said, let's allocate towards high beta? Right. Let's allocate in the places where you were basically catching a falling knife. And that's what Apple was. That's what all of those mega cap stocks were at the end of last year. So now I think it's all about positioning. I think you're in an environment where no one really wanted to allocate in that direction. And I think people are trying to recapture those positions once again. I think it's going to continue. So I'm going to underperform because, I lean away from that, and I wanted more of a low beta approach.
Are you mad?
No.
Don't be mad. I'm the mad one on the show. Don't
listen,
be mad.
It is what it is. You're not when you're running a portfolio, you're not judged by 2 days. Excuse me. You're judged by the entirety of what the portfolio does over a 1, 3, 5 year time frame.
Well, I mean, listen to what Brad Gerstner told us about, these. He used the word tailwind to some of these stocks. I just want you to listen to what he said yesterday on the show, because it's so apropos to what we're talking about right now.
We have a tailwind on multiples for all these stocks. Secondly, we have a reacceleration in revenue growth at Google, at Meta. And third, we have these companies, right, acknowledging that they have the opportunity to be more efficient. Those three forces combined are really powerful forces for 2023. Now, we're not out of the woods on any of those things, but I think you would be remiss to underestimate the relative tailwind that gets created by those forces.